Hey everybody, this is Richard, and in this video I'm going to be going over a few reasons why someone might choose to use the Pro package. And as just a quick reminder, the Pro package trades these 8 different strategies. They all trade together, they're fully automated, there's really no experience necessary, and they're monitored by NFA registered brokers. But let's take a look at a few reasons why someone might want to use it. Now remember, the Pro package trades in $50,000 unit sizes, and so these returns here are the first reasons why someone might choose to use this trading system. Notice how the quarterly returns are just pretty incredible. I mean, there's really only a few quarters where we're down, and the ones that were up quite a bit more than the ones that were down. And so this is one reason why someone might choose to use it. Now, if we look at this data on a dollar basis, that's what this is showing here. So this just shows the per 50,000 traded, how much the algorithm either gained or lost during each of the quarters that we're looking at. So for example, I'll pick the best one. That was Q4 of 2021. The Pro package delivered returns of about 34,498. And if you look at Q4 2018, it was 5,561. So this is one reason why someone might choose to use it, just to get the above average returns. And remember too that all the data that I'm showing you is from a hypothetical account. Just keep in mind the risk disclosure that you see there at the bottom that applies to all this data. But now let's look at another reason why someone might use it. And this is one I just call a phased approach. Now, really the idea here is that somebody starts with a $50,000 account and they go from phase 1 to phase 2 to phase 3. And so I want to just, as the account grows, and so I'll kind of explain more in detail. Let's look at each phase though. So phase 1 is really when you start. So when you start, you open the account with 50,000, and that's what this blue line on the graph shows, is just the account size, basically, month to month. The orange one just shows how many units you're trading. So with a $50,000 account, you can trade 1 unit, and once you hit an account size of 100,000, you could bump it up to 2 units. And so 150,000 would be 3, 200,000, 4, and so on. But in this phased approach, phase 1 is really you're just trying to grow the account from 50K to 100K. And the reason why you're doing this is because once you hit 100K, you can then increase the unit sizes to 2 from 1. Now, another way someone could do this is just open the account with 100,000 and immediately start trading 2. Or 200,000, they could start trading 4. But this just gives you kind of an idea of someone with 50,000, if they wanted to get started, how it might go. Now, again, remember the disclaimers that are on the bottom. Now when phase 2 hits, that's immediately after phase 1. So the account goes from 50K to 100K, and now you can see the account size is 100,000. But now what we're going to do is we're going to compound the growth. And so basically every month you basically would just take the account size and divide it by 50,000. And so you'd be trading either 1 contract or 2 contracts. And you can see for the majority between April of 2019, October 2019, this person in the hypothetical would have been trading 2 units. But then finally the account went above 150K, and now they can trade 3, but eventually it hits 5. And the licenses that we sell are they allow you to trade up to 5 units on each one. Now there's ways you can trade more, but the basic package just allows you to trade 5. And so in this phase 2, you're basically just trying to grow the account from 100K up to 250K, which is when you can trade 5 units in total. Now in phase 3, you really just have a choice to make. You can either continue to grow the account, or you can take out profits at the end of every month. And on the left chart here, it just shows that the profits are being withdrawn. So the very first month, May 2020, when the individual is now trading above 250K, the account would have hit about 310K, and that's why they were able to take out the 60K. And then the second month, the account went again from 250K to roughly 270K, and so they were able to take out 20K. Now you see that there were a couple months where nothing was withdrawn. That's because the algorithm took losses, and so it had to you weren't taking any out when that happened. But eventually it went above 250K again, and they were able to take out profits. But this just shows the idea of in this third phase, once the account is at 250K, the individual can be just taking money out, assuming that the algorithm is profitable. And then if you look over here, this just shows if you just sort of let the account continue to grow. Now, there's a lot of ways this could be looked at. I mean, somebody could get another license and be able to continue compounding up to 10 if they wanted. And remember too that this is not saying that we're guaranteeing that you have gains every month. This is just showing an example of a way that someone can trade the algorithms based on unit sizes to kind of basically grow their account from 50K up to 250K, and then once they hit that, just use whatever profits are made to take money out. Now, someone could also just start with 50K, and at the end of every month, anything above 50K they take out. They could certainly do that. But just remember though, there's definitely risk in trading futures. It's not for everyone. There's no guarantee that the algorithms will continue to do well. But if you look at the data that we show, and you're looking for some kind of a system that's fully automated that will really allow you to shoot for kind of above average returns, then definitely you could consider using the Pro package. It does require about 50,000 to trade in order to get started. And if you only have 25,000, you could look at doing the Smart Pivot. And if you have about 35,000, you could look at doing Elite. But if you have the 50K, then the Pro is definitely the best one. And that's based on the return potential. But just remember that trading futures and options involves substantial risk of loss. It's not appropriate for all investors. Remember, I'm not a CTA. I'm what they call the third-party developer, and we offer the algorithms under what's called a letter of direction. Now, remember too, all the data that I've shown here is from a hypothetical account, so CFTC Rule 4.41 applies. But thank you so much for watching, and have a great day. Bye-bye.